Lately, it seems like prices have been coming down in every category except the ones that we actually care about. Groceries, gas prices, things that we actually spend money on every day. Now, those don't get any adjustments, but where are we seeing prices crash? Stocks, Bitcoin, foreclosures are going up, collectible markets are selling off. It seems like there's relief going on everywhere else except for, like I said, where we're spending money. So, topic of this week is, are we finally in that recession that we've been waiting for the past year? Now, Bitcoin has lost all of its gains for the entire year. The stock market is also in a complete fear bubble right now. People think the AI bubble is getting ready to pop with Nvidia fears, and foreclosures are up 20% year over year. Now, when you're looking at these things, some of these things do sound a little bit scarier than they should be, and there's always some headline play that gets woven into all of this, right, to kind of scare you a little bit more than you need to be. So, I'm going to be breaking down all this week. Nice little quick episode for us so we can stay informed on what's been going on for the past week and so we can keep the conversation going. So let's get into it. And we'll be back in 3, 2, 1. We gone. Welcome back, family, to another episode of the First Sip Podcast. I'm your host, Dekimbe Smith, and this week we are sipping on some good old H2O because we still got the challenge going. And if you ever try drinking a gallon of water in a day, you will find yourself trying to find time to consume all this water. So here I am trying to finish up for the day, but it's been good. If in case you are caring about how that's been going, it's been a good challenge. We've been sticking to it. The hardest part right now, honestly, is getting outside every day because, of course, I'm smart enough to start this right when the winter is beginning and the temperature has been dropping. We've had freezing rain in the past week. We've had cold and windy days, and it's just been a great time. Great time. Really building some resilience, but this is exactly why we do it. So I'll keep you guys posted on that. But this week, we're here to talk about all the other craziness that's been going on in the world, right? When it comes to all the recession indicators and the fears that seem to be popping up day after day when you look at these headlines, right? Whether it be from the Bitcoin drop recently to the foreclosure news that came out, it seems like there's a lot of things that are pointing towards that, that alarm that's going off that says, hey, it seems like something's going on over here that we should be paying attention to. But of course, when you look at the government, the people who make those decisions from the economy, they're probably not going to be quick to say, oh yeah, guys, we're in a recession. So go ahead and, slow up with these things, just take your time, maybe start saving some money. They're not going to tell you these things. And I was actually doing some research on this earlier, right? About why do they wait so long? Why do they wait so long when it comes time to go ahead and make a decision about, is there a recession or not? Why don't they go ahead and, once they see the data, for that month and then go ahead and just break that news? But that's not what happens. And they actually go ahead and when you read the information that they have there, it pretty much says that, we take a significant amount of time to wait for data to come in from months and months ago, and then we'll look at that information and the indicators from that period, whether that be the employment rate, whether that be the credit default rates, whether that be foreclosures, all these different things, right, that go into whether or not the economy is truly slowing down. They wait a significant amount of time to look back on that and say, okay, well, if you look back on that thing, that happened 8 months ago, 10 months ago, it seems like we really did have a significant slowdown there in the economy. And now this is where I've talked about this before earlier in this year, where I believe you see these things happen because, it's more of a political play than anything, right? I don't think it's in their best, how can I word this? I don't think it's in their, best interest to release this information as it's happening, because how do you control that, right? You tell everybody, hey, listen, unfortunately, the economy's slowing down. Things aren't looking good. Everybody's losing their job. People aren't buying things anymore. Home sales are down. Auto sales are down. Consumers aren't spending money in the holidays anymore. So, but, we're going to get through it. Let's be honest, right? People don't want to hear that kind of information. So that's why I said you see these things come out 6 months, a year later, and they tell you oh yes, back at that time, Q2 of 2025, we had actually entered a recession in the U.S. economy, and this is where we're currently at, right? You're not going to hear it right now. Nobody's going to come out and say, oh, in Q4, we're doing these things. And it kind of goes hand in hand, right, with the conversations I've talked about before, with the fears with, what the Fed is planning on doing with interest rate cuts. Right, because this is when they're sitting back and saying, okay, well, we're looking at some data and we're not 100% sure about how strong this economy really looks on the surface, right? We know it looks like people are spending money. We know it looks like people are out there. But when you kind of pull back the curtain and see what's really going on, oh, no. almost 60% of Americans now aren't, aren't really spending the way they used to be spending. And like I talked about before, it was incredible actually look at that number where you saw like the top 10% of Americans make up over 50% of the spending in this country right now. So like I said, if they start pulling back, which is certain things that we're starting to see, right? Especially like when you talk about like the home sales and those kind of things, you're going to start seeing those areas of the country starting to pull back, especially when the bigger picture looks like, okay, things aren't as stable, right? You talk about like the Bitcoin fears, big sell-offs that have happened in the past 2 weeks now, right? At the time of this, Bitcoin, I think, is just right back over $90,000. And this is coming from a high of 126,000, 125,000, a little bit earlier this year, just, a couple weeks ago. So to see a drop like that, right, and completely lose, like I said, the gains that it's had this year, you're going to sit there and start scratching your head, especially if you're somebody who's invested in this and saying, wait, I'm a big believer in Bitcoin, but this isn't looking too good. So should I also go ahead and sell off because I see other people selling off? Now, this is where I would go ahead and say, and I'm not a person, I don't have a whole, Bitcoin myself. I don't have 2-3 Bitcoins, right? Got a little bit invested there just so I can get in, learn about it, dabble, and of course, be along for the journey as it continues to grow over the next, however long I'm holding it. But that's another thing I'm gonna touch on too, right? Like make sure you're not just selling these things as soon as it drops, because what happens, especially around this time towards the end of the year, people expect, and when I say the people, the big whales, the people who have a lot of money, what you'll learn is that they have to go ahead and start consolidating some things towards the end of the year, right? Start making sure that their books look good, making sure that they're taking profits where they need to take profits, making sure that they're deferring things, going into the next year so they aren't taking certain profits to get taxed on. It's a completely different game that they play. But one thing that we do know is that when they make their moves, when they're moving billions and billions of dollars, it is going to shift the market. It is going to shift certain asset classes. And I think that's another thing that we have to consider and also do a little bit more research when we see these massive sell-offs, right? It's like, okay, who's selling off? Why are they selling off? Is this, once again, just a part of them, rebalancing their portfolio? Are they planning on buying back in 3 months later, 4 months later? Because that's, once again, these are the things we're not going to be sitting here and having a conversation with them and hearing. We're just going to see the headline that says Bitcoin drops, loses all gains for the entire year, and not knowing that the same person who just pulled out, half of their entire stake in it is getting ready to jump back in once they see that entry point that they're looking at. Right. So that's why I said, like, I'm a big believer in like really, just diving in and learning about these things, even if you're not at the point yet where, like I said, you can go ahead and buy a whole Bitcoin. You can go and invest $5 in Bitcoin right now. And that's something me and my friends talk about too, where it's just because, you don't have a whole bunch of money, you can start with a couple of dollars here and there every paycheck, right? And just see what you can do, and it will grow, right? That's the whole cool thing about investing. It's not like you're just putting it in an account that doesn't pay any interest or that doesn't have any appreciation, and you just watch it go from, okay, today I put in $10, next week I put in another $10, and it's at 20. And that is still good, right? Because you're still having some like you're still going to see it grow over and over and over. And that money is going to come in handy on a rainy day. Trust me, you're going to need those emergency funds. But investing is a whole different beast, right? Especially when you check that account that you haven't maybe been monitoring, but you've been doing the transfers to it. And it's like, oh, wait, this done run up a little bit more than I expected. Right. I think I've told the story on here before, right? When I first started investing in NVIDIA, that is another one, right, that currently has some fears around it because people are saying, wait, the money that's going into, NVIDIA that's being invested, the money that they're reporting on their earnings calls, it seems to be cyclical, right? Like it seems like they're getting this money and they're investing it into like other AI companies that are then buying NVIDIA chips. And then they're taking, once again, that money that from the purchases and investing. So it's like, okay, is this just a cycle that's kind of hiding, right? Like the cup game that they're playing behind the scenes. So like, we're not really seeing the fact that, okay, wait, are they actually making any more money? Or are they just kind of, like I said, circulating the money that they currently have right now to make it look like things are going good? So, and those are things, like I said, as I sit back and continue to learn more and more about like what really matters when it comes to investments, these are things I scratch my head about. And I'm like, man, like, you start reading things like the earnings reports for these companies and you're seeing like, okay, where is the money coming in from? How much is coming in from things like, like private investments and like I said, and how much is going back out into private investments. It's just like, this is some pretty interesting stuff, but like nobody takes the time to do that. Right. And like I said, I always say people are busy, but if these are the things you care about, like I care about it, right? I plan on having this stuff as a concrete part of my future. then, and like I said, if you're listening to this, you're probably somebody who cares about financial security and building that lifestyle. So I'm pretty sure you're going to want to understand like what's going on with your money and how does this stuff actually work, right? So that's why we break it down. And, of course, I can't forget about the collectible market out there, because this is another one where you'll see when times are good, people are spending money on the collectibles. And when times are bad, man, people are trying to offload those things like it's going to give you the plague, right? Like you about to get infected with something that you don't want to get infected with. And people are like, get this off my hands. You remember just a couple of years ago, one of the biggest collectibles that were going around was NFTs. All these celebrities coming out with different NFT type of items and saying, okay, hey, you can come and do this. You'll have access to this. And then all of a sudden the whole market blows up and those prices for those collectibles completely hit the floor, right? And it's pretty much like you got to like just be like, hey, listen, I'll just give you this. Just take this thing off my hands, right? I don't even want it anymore because I don't even like the fact that I got to sit here and keep looking at this thing. I feel foolish, right? And I think we've all bought a couple collectibles here and there. If you're like me, if I look around my room, I definitely have a few collectibles. My friends ask me, they'll be like, yo, did you really buy a cereal box with Travis Scott on it? Yes. And that is one collectible that I will hold near and dear for the rest of my life, right? I'm looking at it right now. And the ones who are listening, my friends know, the ones who always make fun of me about that. So, hey, it's staying here. That one's not going unless you want to buy it for the right price. But that's what I'm talking about, right? So like those collectibles that people buy when times get rough, they're going to be ready to let it go, right? I know some friends who collect things like, Pokemon cards and those kind of things. And you'll see the prices on those really start to fluctuate, right? Like, okay, something that might have sold for a higher price, maybe just a month ago, maybe last week. Now things are looking a little bit weary, right? And people see some other sell-offs happening in the market. And now all of a sudden they're like, okay, the floor is really starting to fall out on these things. So we got to make sure that we go ahead and get out as well before the entire market crashes, because you don't want to hold it until, it gets to the bottom, right? Because that's also like, it's also like the negative side where people say like, don't, buy too early into a dip, right? Like you don't want to catch what they call like the falling knife, right? So you don't want to catch the falling knife, but also at the same time, when you're holding something, how long do you hold it before it's time for you to say, okay, you know what? It's time for me to let go. And this is, like I said, once you're learning about these things, you do your research, you come to find out that you should always have, what they consider like an exit point. The same way you have an entry point, you have an exit point, right? What is that point where you can sustain and say, okay, you know what? I don't want to lose any more on this investment, on this, this bet that I've made. So let me go ahead and pull out of that because I don't want to lose all my money. But like I said, you also don't want to pull out too early because there is a normal range when it comes to corrections, right? When it comes to seeing how these things fluctuate, like I said, all of these things have charts that you can pull up and look back at over time, right? So this isn't just some made up feeling about how people feel things go. It's like I said, you look at the signals, you look at the way these charts are moving and saying, okay, like take Bitcoin, for instance, right? People know that every 4 years, Bitcoin usually has some significant shakeup in it where you'll see this type of drop off, right? It's really just built into the way it goes. But if you're not educated on these things, you're going to look at it and say, everybody's selling off, so it must be time for me to go, right? Same thing, like I said, with the collectibles market. There might be, depending on the market that you're in, a normal cycle where you realize like, okay, people do usually sell these things off more, maybe around the holiday times because they're like, maybe just same thing with Bitcoin. Maybe they're purchasing as well. So they're saying, okay, let me offload, certain inventory so I can now purchase what's coming for the new year. Because like this, depending on when you're listening to this, we're getting ready to move into the new year. So a lot of things happen and just kind of shake up, like I said, towards the end of the year. And one thing that we see shaking up now, moving into the next topic, is foreclosures. And this is information that if you're in the home buying space, you're in the real estate space, somebody who's been paying attention to the numbers, because most people have been waiting for those prices to come down to see some sort of relief. They're looking at these foreclosures numbers and saying, wait, what's going on over here? I see foreclosures are up 20% year over year. Is this the time? Right? Is the housing market finally going to come down? I talked about this earlier this year on another episode where I was saying, okay, it looks like some things are happening right now in the economy. And, is this a sign of a housing market recession, right? Buyers are pulling back. You're not seeing as many mortgage applications. But now fast forward, right, months later, towards the end of the year, we're also seeing foreclosures tick up, right? Especially, in places like Florida, places like Nevada, places like Illinois, Delaware, places where, if we're being honest, usually do have foreclosure activity and are usually amongst the top 10 once foreclosures start to increase, right? And foreclosures are also a normal part of the real estate cycle, right? People purchase homes, things change with lifestyles, right? With their housing costs, and then they're no longer to afford them, right? That's, like I said, just the same thing that happens with these other things, with these other investments that we were talking about before. So we can't always look at it and say like, oh my gosh, everybody's losing their home, especially when you look deeper and see that, okay, this foreclosure increase is actually just increasing pretty much to a normal level that we would have seen before the pandemic, right? And I know I usually get on here and talk, about like, okay, what's been going on during the pandemic, because economically, there was a lot of things that happened that shifted that we're still recovering from, right? And when that kind of still need to be corrected. So these are the things when, like I said, when I see headlines for foreclosures being up 20% year over year, I'm like, okay, but from where? Right? Because if you remember during the pandemic, there was a lot of forbearances, right? A lot of different things that people were able to do to kind of push back any kind of, worry about being foreclosed, about getting that foreclosure process started. And that's what this number is reporting on, right? You're seeing a 20% increase in the foreclosure starts. Now, what that means is that if somebody is 120 days past, their payment due date, that's when the lenders are going to start the foreclosure process and work on foreclosing on that home, right? So this is, like I said, they usually give people some time to get some stuff cleared up, but let's be honest, it's been a tough year, right? People might be getting strained on the credit side, right? We've talked about it. Interest rates have not been cut like people have been waiting for. And when you're looking at that, interest rates aren't only affected when it comes to buying the home. We're talking about things like those auto loan payments, right? Those credit card payments where people are still swiping their credit cards month after month to get by. But when you're also looking at that interest payment that is just making that debt grow over time, you're like, oh God, I'm pretty much stuck in a hole and I don't know how I'm going to get out of this hole. And like I said, once you combine that also with the mortgage payment that you now have to pay, people are starting to have to make some sacrifices and saying, okay, well, how do I keep this game going right now, right? It's like I got to make payments here, and here, and more money isn't coming in. It's just that the payments continue to go up, right? You take what's going on down in Florida when you look at the foreclosure. You take what's going on down in Florida when you look at the foreclosure situation, and you'll see, right? A lot of these homeowners are dealing with rising HOA costs, right? Rising insurance costs based on what's going on in the environment and the climate down there. And these things that are, if you look at the people who make up the homeowner, section down there, a lot of these people are down there on fixed incomes, right? Florida is a huge retirement state. So a lot of the people who move down there aren't going to see big increases in their income over the next 5-10 years of their life, 15 years of their life, like you would in other places. So they might be able to kind of get through, those economic downturns. But what you're seeing is, okay, now that these increases are happening, like I said, from the HOA insurance costs for people on fixed income, what do you do, right? Like you can't sit there and just make up money. You have to move, right? Or you're going to sit there and try to figure out, okay, how can you come up with the money to maybe, do something to keep your home, right? Like you're going to try to stretch it out as long as possible so you can do what you need to do. But unfortunately, it gets to a point sometimes when there's nothing left for you to do, right? And the process starts, the foreclosure happens, and people have to move, right? Like this is a reality, like I said, that a lot of people deal with time and time again in this country, but I don't know if it's actually talked about enough. And I don't think there's enough, like I said, stories of people who have gone through it and are now saying, okay, well, yes, this is what happened. These decisions that we made, these are things that we didn't even know to be aware of right before in the process that probably would have helped us avoid this stuff. So that's why, like I said, I'm always reading this stuff, diving into it, because I know the journey that, like I said, that I'm on when it comes to financial security and getting to the point that I want to get to in life. I don't want to wait until I'm there to say, okay, now let me start learning about all these things, right? I'm very early in my journey when it comes to investing, right? Real estate, business. But at the same point, I'm super curious about all the things and then the way these things all are working behind the scenes, because I just think to myself, I'm like, you know what? As I continue to put one foot in front of the other and do the work that I need to do day in and day out to continue to grow, I also want to learn as much as I can, right? So I'm equipped properly as I'm putting one foot in front of the other and not just going out there blindly, because I'm not just saying, right, like to just stagnate yourself with learning a whole bunch of unnecessary information or even information that you do find necessary, but take the steps along the way, but also make sure you're learning as much as possible, because guys, there is so much information out there. And especially, like I said, when you use tools like AI, when you're using it right, like good old Google, you're talking to people, seeing what's happening, you can get such a good worldview that I think helps you just shape your perspective, shape your opinion on what you need to be doing and saying, okay, let me take this next step, right? This seems like the right move to be making based on what I know is happening in the world around me, right? And like I said, that is why I continue to bring this information to you guys week after week. And just to keep us informed, make sure that we're growing together. Like I said, I always love having the conversation, checking in with you guys before or after the episodes, seeing what you thought, and just continuing the conversation. So that's all I got for this week when it comes to the important stuff. But now let's get to the more important stuff, which is the content rec of the week. Right. And this week, I've got a good show for us, which is The Mighty Nine. Now, this is an animated show, right, that just came out on Amazon Prime. And if you know me, I'm a big fan of the animated shows, right? Anime, all those different things. I was a huge fan of Dragon Ball Z, right? Marvel, superhero, those things, right? Like I love that kind of stuff. So when I saw this new one come out on Amazon Prime, I was like, oh, I got to go ahead and check this out. Now, I'm only on episode 2, so I don't have a whole bunch of information for you guys, but you got to check this out. Let me know if you have started it, because it's got everything, right? It's got everything to it, right? It's got the different factions that seem to be fighting over some sort of world order with magic and armies and kings and queens and mythical creatures. All that stuff that just makes a really good story that helps you unplug from all the other craziness that's going on in the world right now, and to make you just feel like a kid again. And like I said, I feel like sometimes, and sometimes I feel like we all just need that kind of relief and just, like I said, that break from reality. So if you have checked that one out, or if you haven't, go ahead and check it out. It's The Mighty Nine on Amazon Prime. Let me know what you think. But that's all I got for you guys this week. So until next time, stay tuned, stay curious, and as always, enjoy your first sip.